a Director of CE Family Law and an accredited family law specialist. I'm honoured to chair this event today. We have two wonderful speakers with us today who have offered their time to share their experiences with you today. Please send through any questions you have through the chat, and we'll endeavour to answer them right at the end of the webinar. So let me introduce our first speaker, Josh Pennell, financial planner. Josh is a director and head of wealth management and at Prosper Advisory. He's also the author of the best-selling book via Amazon and Kindle called What Parents Want. Josh, I'll pass it on to you.
Thanks, Sanaz. Yeah, great to be here. Good to be part of it, and thanks to everyone for joining us. My role today is probably to talk through some of the more financial planning related considerations for people, and really what I find can help people make steps forward, because obviously events such as separation can be extremely can be daunting, stressful, at times overwhelming, and my view is that people just really need to get from A to B, then B to C, and so forth, rather than try to jump from the start to the finish all at once, or you just don't get anywhere. So my aim today is to give people some tools and ideas that should help them achieve that, give them a bit of structure, process, and some positive feeling that they can really make steps forward. My involvement really comes in two ways. I've been through separation and divorce myself, and had plenty of complexities in that, in terms of kids and a business and different asset types that you need to work through, including a business, which has its own challenges to assess and work through as part of the financial settlement. So I certainly understand the challenges people face at a personal level, and then also have worked with many clients going through it and helped guide them through to a happier and secure future. So can really come at it from both angles. So in terms of what I find useful and the key things for people to consider doing, I'll share and read through. And just before I do that, I'm also going to share a link in the chat, which will also be circulated after the session with a recording of everything, just with links to some useful tools that we've put together for people to essentially be able to follow the tips I'm giving today with actual checklists and documents that can be used to achieve that. So where should people start? How do you really tackle this big, scary, uncertain thing called separation and some of the financial considerations around it? Well, the first thing I recommend for people to do, and as I said, we've got a checklist with all of this in it, is to really identify and list out all of their financial position. So if anything's just swirling around in your head, or you're feeling uncertain, or it's not clear, of course, you're not going to be able to make progress. You'll be awake at night thinking about it. There'll be a lot of negative impacts of not having that clarity. So first of all, list out all the assets, the investments, the liabilities. What are they? What are they worth? Where are they? Whose name are they in? All the key data points around that, just to really get clear. And this could be things like bank accounts, investments, shares, property, superannuation, insurances, even things like wills and other key financial documents and considerations. So start with that, and you'll be in a good position to actually more clearly understand your financial position.
Josh, just to interrupt, you made a very valid point with respect to where you start, because from a family law perspective, I start at exactly that. What are the assets and liabilities? Whose name are they in? How were they acquired? So they're the questions that I ask. And if someone comes and sees me and they've already got that in place, or they email that to me, it makes my life significantly easier. So then I can take them through the next steps.
Yeah. And a lot of people, aren't living and breathing finances every day. It's not their thing. So in that link I provided, not only is there a checklist of things to do, but there's also other links to things like a budget template, a net wealth template. So you can simply just type in name and number, and that's the sort of information that you're going to need, Sanaz, to help them. So it takes that sort of, oh, I don't use spreadsheets, or I don't know where everything is. It just helps getting started feel easier and more achievable. And start with a draft and fill in the gaps later on. Just step forward slowly at a time. So that's a good starting point. The second thing I think is really important is a separation, whether you've got kids or a dog or just you and your ex-partner. Either way, it's a significant change to a whole bunch of things in your life. Your plans, your goals, your living arrangements, your financial position, and also other thoughts may come because of this significant change about what you want your life to look like. So when you're going through that, in order to make the right decisions with things like financial or other settlement plans, whilst it can be difficult because you're in a state of change and uncertainty, I really recommend that people actually get clear on what they think they do want for their lifestyle and financial future going forward. What are the things that are important to them? What are their lifestyle goals? What matters to them going forward? What might their living expenses or any larger expenses going forward be, whether that's for themselves or perhaps things like school fees or other things related to kids, if applicable. What level of income will be needed now or in the future to meet those needs, and consider things like that, so that rather than making decisions based on your past position or just trying to get it done, you're actually then trying to align your decision making with the things you want for your life going forward. And that gives you the best chance of ending up with the right resources, whether it be particular assets or investments or making decisions about employment and so forth, that then align to those goals.
Can I just interrupt again, Josh?
Sure.
In the sense of having your expenses, outlining what your expenses are likely to be, again, that's really valid from a family law perspective, because your expenses are obviously going to differ from what they were when you were in a relationship to what they are after a relationship, after you've separated.
Yep.
So being able to put a list together as to what your expenses are, I can then ascertain and say, okay, does your income meet those expenses, or do you need external help from your ex-partner to be able to assist you with those expenses? So
Yep.
once again, that's a very helpful tool from my end.
Yeah, exactly right. And it helps people have the right information prepared and available to make progress with the things that need to be worked on. So that's important. And as I said, aligning it to what you actually want for your life means you're more likely to have a happier future down the track. Next thing I think is really important is to actually model out different scenarios. So I think sometimes, let's use the family home as an example. Often it's one of the biggest assets in people's lives, but it also often has a lot of emotional attachment as well. So if you've got this asset that's worth a lot of money, then straight away it's taking up potentially a large portion of the asset pool that needs to be split. And it's also got a high potential emotional value. Then in many cases, it is something that people are quite keen to retain potentially. But what if that asset or receiving that asset then creates other problems? Cara will talk about debt later on. So what if there's a lot of debt against the property? How do you service that in your new financial position? How do you meet your other needs, pay the bills, put food on the table, etc. is one consideration, not only for the short term, but also the long term. So sometimes it might be a big goal to keep the home, but it could be at the detriment of other major decisions or major needs. So it doesn't mean you don't aim for that outcome, but it is important to go into it, aware. So where we model out these different considerations can help just, brainstorm and kind of throw a bunch of stuff at a whiteboard. Really does help to get the ideas a lot clearer about what might be possible and the pros and cons of different options. So things that might need to be looked at could be, will you have enough cash in the bank for, safety, security, rainy day type scenarios. Is there going to be debt, and are you going to have an ability to service that debt? What might the income sources be, and where from, and how much? Is it from your employment? Is it through child support? Is it through spousal maintenance? Is it through investment income, rental property income? Where's the money coming from to meet your needs? Are there tax debts or tax considerations? Are there implications of selling different assets? So if you sell a home, there's likely not to be any capital gains tax. It's principal residence. If you sell an investment property, there may be a tax bill coming that someone's going to have to wear. So actually running the eye over these different options and assessing the pros and cons of keeping different assets and different investments is really valuable. So that's what I recommend as step 3.
I think that's, again, I'm going to interrupt. That's really important in the sense that if clients or parties have an investment property, and it will trigger, or it may trigger CGT, capital gains tax, it's a good idea to know what that capital gains tax, if they're planning on selling, is likely to be, so that can be taken into consideration in relation to their assets and liabilities. It is a liability that will form part of that asset and liability that we were talking about right at the start. It will be a liability. But if someone's keeping that investment property, then the person keeping it will take that capital gains tax with them. So it's really important to work out, do you want to keep that investment property or you don't? And what are the tax consequences?
Yeah, definitely. So that's a good start for everyone. Three more to go. They're a bit faster and simpler, and I'll work through them. So the next one is superannuation. So many people already don't have a great attachment to their superannuation. They should have, but they don't necessarily. And sometimes during a process like separation, it can be that sort of forgotten thing as well. It's like, oh, I won't worry about that. The house is more important, or something else is more important. But what you want to make sure is that you're not maybe setting yourself up for failure down the track. So in many cases, superannuation will likely come into your discussions, Sanaz, about whether that will be split in some way between parties. And yes, it does maybe give some options, and it could be sort of a negotiating tool, so to speak. But I think people do need to just not push it to the side and not worry about it and make it a secondary thing, because you do want to make sure your longer term future is looked after, your retirement needs can be met. So looking at the superannuation and considering whether that's something you want to make sure you're optimizing through the settlement, how you might achieve your retirement goals in future, because with separation, your whole retirement planning essentially has changed. Do you need to be reviewing anything within your super? Is there multiple funds? Is it invested the right way? Are there things like beneficiary nominations, which is where the money would go if you pass away, that need to be updated? In many cases, people might no longer want it to go to their ex-partner. So there is a lot to think about with super, and I really recommend people have that quite high on their list. Another one is estate planning. So obviously, if you've got a significant change in relationship and personal situation, then your wills and your wishes for where your assets might pass in future, there's a fair chance that would change. So likely important to review your will with an estate planning specialist. None of us here today are specialists in that, but we have people that we can refer you to that we know and trust if you need that. So that's definitely really important to think about. And there's also other things from an estate planning perspective that do sit outside of the will. There's a lot of things we do with clients where they can hold investments and assets in a really tax effective way and outside of the estate, so that if things like people challenging their will occurs, which is common and is also commonly successful, then you are avoiding some of those issues and headaches. So the estate planning side of things is vital to review. And all of these things will be really important when you're sort of going through that separation and settlement process. So you haven't settled yet, but you're really reorganizing, reviewing, planning what you need to have in order and getting your ducks in a row. And then if you close that door and say you've settled, you know what you now have, and you know what you're now moving forward with, that's essentially a separate point in time to then do another retake and say, okay, I've settled. This is now my personal individual financial position. I now need to assess what I've got, project forward what that might look like and what strategies are going to help me maximize my lifestyle and my financial outcomes, and then implement the best strategies and investments to help you get there. So that'd be the key things I think people should be really focusing on, working on. And as I said, there's the link there to different tools that can help make that easier for people.
Just to add to that, Josh, when I see clients, I always advise them at the first conference to review their death nomination. Who are they leaving their superannuation to? Do they still want it to go to their ex, or do they want it to go up to other people? And I always say, get some advice from a financial planner as to, you know, what the best way forward is in relation. It might not be a tax effective way of leaving it to your kids, for example. You might have to leave it to other people. Anyway, it's something that I always advise clients on. The other aspect of what you were saying, which resonates with me, is the estate planning. Once you've separated and you've got your settlement, it's important to think about, if you do enter into another relationship, how you're going to protect what you've got, because that's really important in the sense of you've gone through this family law case, and you've gone through getting advice about settling this aspect of your life. And to avoid going through it again, what can you do to help yourself? And you can have financial agreements in place where you quarantine certain assets from previous relationships, so that the new when you're entering into a new relationship, those assets are protected.
Yep, definitely. Yeah, there are a few ways out there that sit outside just the will, and that's where people having these discussions and actually understanding what their options are is important. Your point about superannuation is really valid. A lot of people don't realise that there is essentially a tax on superannuation if it passes to non-dependent children, and it's a significant amount of money. We've been doing work with a few clients at the moment. There are ways to minimise that. So yeah, we don't want people paying more tax than they have to, or having money go to the place they don't want it to go.
Absolutely. Well, thank you, Josh, for giving us your time and taking us through what we should consider in the once we have separated, or in the event we are considering separating. So thank you for your time.
Thanks, Sanaz.
I'm going to now introduce you to our second speaker, Cara Julian. Cara has over 10 years of experience in property investing and a degree in commerce and management, and a diploma in finance and mortgage broking management. Cara has established Brava Finance, which focuses on empowering women to take control of their finances. Cara, I'm going to pass it on to you so that you can give us more information about what you do and how you help clients.
Thank you, Sanaz. And thanks, Josh, for sharing that great advice and guidance. I really wish that I had a lot of that knowledge when I went through my separation. You know, for me, here speaking today, I speak as a mortgage broker, but also someone that has been through a separation. You know, for me, it started back when I was young and grew up in an era where men looked after all of the finances. You know, my dad looked after the finances in the family. You know, my friends' dads, all the media spoke to the men. So, yeah, I grew up with probably very low financial education and confidence as a result. And then I took that through into my adult life and handed what I felt naturally, handed the responsibility over to my husband at the time, and ended up with a divorce, which was okay because I was young. We didn't have, too much debt. So I sort of went back into life again and stumbling through my finances, and then repartnered and made the same mistake again, handed my financial responsibility over to him, became very financially dependent. So, we had a daughter together. I was a stay-at-home mum for 6 years. So, that whole gender finance gap is real. So when we separated, I had no income because I had a marketing business that didn't survive COVID. And I felt really financially vulnerable. So for me, I didn't have a game plan. And it was a really rocky road, and didn't need to be so rocky if I had have reached out and got support and, that game plan to help me through it. So I retrained as a mortgage broker. And for me, it was important to do that because, to obviously gain the financial knowledge that I needed, because now the financial security for me and my daughter was totally on my shoulders. Also to help other women, particularly going through what I went through, making my story a part of someone else's survival guide. So my business, as a mortgage broker, and my passion is to help women challenge the status quo of perhaps these outdated mindsets and take control of their finances and, navigate the property market to secure a financial future. So today, I could talk for hours, but limited time, I thought I'd take you through a little bit of the financial or mortgage terms, just a small handful, because there's a few that are, excuse me, sort of take a little bit more to get your head around, but Josh is going to put a link in the chat with a downloadable just with some of the other mortgage terms, because I find, people find the mortgage world quite overwhelming, but it doesn't have to be. And then I'll talk about options to help support a property purchase, a bit about the process, and then if there's any time, I'll answer sort of some of the most common questions that I get asked. So mortgage terms, there's so many terms thrown out around there. And I think, loan to value ratio, or LVR, is one that's important. And that's basically looking at your debt as a percentage of your property value. So if you're going for a loan, a lender often sees an LVR under 80% as less risky. So anything over that 80% mark, more risk involved. So that's when, moving into the next term, loan, or lender's mortgage insurance, or LMI for short, comes into play. So it's basically if you have a mortgage and your borrowing is over 80%, then you need to pay lender's mortgage insurance, which people get a bit confused. It's not actually an insurance to protect you, even though you're paying for it. It's actually an insurance that protects the bank or the lender in case you default on your mortgage repayments. Offset and redraw, another sort of two things that people get confused about. And both offset account and redraw work exactly the same way, and that whatever money you have in there is offsets against the principal. So the interest that you are charged, which is calculated on a daily basis, is going to be less. Offset is a separate transactional account to your loan account, and you can, with most lenders these days, you can have 5 or 6. So if you are in a position where you get your salary paid into one account, you might have a bills accrual account, you might have a holiday savings account. All of those accounts will basically join together in the bank's eye, and it will come off your principal amount for when the interest is calculated. So redraw works in the same way, but it's actually a feature of your loan account. So it doesn't have the flexibility of an offset account. So you would just manually make extra repayments or put a deposit in at any time. So obviously with offset being a bit more flexible, sometimes it comes at a premium rate and also can attract monthly account keeping fees as well. Jumping now into, there is support for those wishing to purchase a property if you don't have enough of a deposit. Obviously there's two parts to if you want to apply for a loan. So one of them is your servicing ability, so that's looking at your income. And the second part is your deposit that's required to purchase the property. So as I spoke before about LVR, or loan to value ratio, ideally it's best to have a 20% deposit. However, the government now has stepped in and recognised that for first home buyers as well as single parent families, it is quite hard to come up with a 20% deposit. So they have home guarantee scheme where for both of those two groups, you can actually borrow up to 95% without paying lender's mortgage insurance. So essentially the government acts as a guarantor, but there's no money swaps hands or anything. It's just the government saying, yep, as long as you come up with a minimum 5% deposit, then we will guarantee the rest. Now, it's obviously eligibility criteria and terms and conditions around that, but it is great. And I've seen a number of people being able to enter the property market earlier because of that. Also with lender's mortgage insurance to try and avoid paying that. If you are an essential services worker or in the medical profession, some lenders that will waive the LMI fee. Also servicing guarantor and security guarantor. So people do get confused between the both of those, but if we look at a security guarantor, maybe you have parents or siblings that have property and they can help support you if you can't provide that 20% deposit, and you can use some of the equity in their property. And as I spoke before about two parts to when you're applying for a loan, one is servicing, so having the income to be able to support the loan repayments, and the deposit. The servicing can obviously be an issue for some people as well. So there's another opportunity if you can have the support of your parents to help you be able to, without having to go on the title or the loan as such, but help support you with their income for servicing of the loan. And once again, there is terms and conditions. You need to be able to show that you can support a minimum of 60% of the repayment.
Sorry to interrupt.
Okay.
Do the banks take into account payments such as spousal maintenance by your partner, or if there is a child support agreement where one party is paying the other child support? Is that taken into account? And also Centrelink payments, are they taken into account? Because if they are, that would be quite helpful in the sense of meeting that income bracket.
Absolutely. And it's a good question, Sanaz, because so when we, as a mortgage broker, we speak to the customer, we understand their financial position. The first part is to determine the maximum borrowing capacity. So we look at a serviceability calculator. And so what that does is it takes into account your income and it takes away the expenses to see whether you have money to be able to support the mortgage repayments. So that income can come in many different forms. And so we have access to over 50 different lenders, and a lot of lenders have different niche policy. So some lenders will take into account those payments, so your child support or child maintenance, family tax benefits, or any of the Centrelink payments, take that into account. Some lenders, the maximum age that of your dependents for which you're receiving the income is a maximum of 11 years old. Some lenders can go up to 18 years. So there is flexibility, and finding a lender that's going to be able to support your unique situation is really important part of the process. So yeah, absolutely that income can be taken into account. It can't be relied on 100%, So there does need to be some form of PAYG or even self-employed income.
But that's quite helpful for my clients in the sense that if they, for example, want to keep the family home, but their income is not enough to be able to do that, and if they can reach an agreement with their partner where they are receiving spousal maintenance payments for a period of time or child support payments until the child or the children are 18, then they may be able to keep that family home and be able to service it. So it's really good that the banks do actually consider that.
Absolutely. Because everybody is in a different position, and some of my customers will come through with having the opportunity to be able to refinance the family home, meaning that the ex-partner's name is taken off the title and the loan. So you need to be able to show that you can service the loan repayments. Sometimes there may be a cash out part involved as well if there's an amount that needs to be paid to the ex for the property. And sometimes that doesn't work though. And a property purchase may be something that that needs to happen. Or even, look, I have customers come to me even a year in advance, or just having gone through separation, having spoken to a financial planner and having their finances in order, come to me and we work on a plan to help understand what their borrowing capacity would be, what the amount of deposit that is required, whether we can use any of this government support or parent support. And then we develop a plan. So it might be a year that they need to be able to save for the deposit. But I think, knowing that is an option helps so many people, and just understanding, that first step to take, because, when you come out of that separation, it's overwhelming, and you don't really know whether you're coming or going. You're not sure what's happening. You're worried about your financial future. So sitting down with somebody and actually understanding your current position and, what it's going to take to get there, I think is a really important part of the process.
Sorry, Cara. Yeah.
Sorry, Josh. I've just got one other question. If you can talk to us about refinancing and how that works, I think that would be quite helpful in the sense that how long does it take, the process involved? Because I have clients who, again, for example, want to retain the family home, and they know nothing about the refinance process and how that works. And sometimes they have to provide pre-approval. Like if you want to keep the house, you've got to be able to afford to keep it. So how does that work from your point of view and the bank's point of view?
Another great question, Sanaz, because typically the whole process is what overwhelms people because they don't understand what's involved. And so if you're looking at wanting to keep the family home, then there needs to be a change in the loan structure in terms of them obviously taking a name off the loan. So a refinance, whether you decide to stay with your current lender or whether you look to go to another lender that maybe have a more competitive rate, or a product that's going to be within your best interests, suit your interests more than your current lender. So basically that process starts with when you come to a mortgage broker. We sit down and have a look at your current position, understand your needs and objectives, because we work under the best interest duty. So we have to make sure that any loan recommendation that we make is within your best interests, which is something that a lender or a bank is not obligated to operate under. So we spend time understanding what you want to achieve and, your financial position. So then we take, there's information documents, we've got IDs. If you're PAYG, we've got pay slips, we've got bank statements, etc. We actually have a really easy and friendly to use portal, our customer portal, that is set up so that you can actually put all of that information in and answer a questionnaire, just to make sure, as I said, that we are ensuring that any loan recommendation is within your best interest. Then I go through depending, that length of time during that process is dependent on how quickly you can get that information through. And then I would probably take about a week to go through all the checks and balances. And that's understanding, ensuring that your financial position is, with your expense categories, making sure that marries up, looking for any red flags potentially. So, and then I use that information to prepare an application. So during that time, we look at lender options with policy that supports your unique circumstances, and then prepare the application. So I basically do all of that on your behalf. The biggest part of that is you providing the documentation. So from when we first speak up until that part, as I said, it is dependent on how long it takes for you to get your information to me. But if you can do that quickly, you're probably looking at about a week and a half. So during that time, I also work closely with the bank's business development manager, so the go-between person between the bank and the mortgage broker, and just making sure that it's a strong application by the time we submit it, that it meets policy. So I've never had a loan application declined, because we make sure that we tick all the boxes before. So the benefit of that is once we submit the loan, the next step is obviously conditional approval or pre-approval. So that should only take a couple of days if it's a strong application. That's basically when the bank goes, we are mostly satisfied with your application, and we just need, there might be a few conditions that they put in place that you need to meet. And then between that and formal approval can normally take sort of up to about a week. Where the most amount of time is taken is if you are refinancing to another lender. There's probably 2 weeks between formal approval and settlement, because your outgoing lender doesn't want to lose you, so they keep you as long as possible, particularly if you're paying for, you're paying a higher rate. So you're looking at about sort of a 6 to 8 week process. Fully supported with a mortgage broker though. So, my aim is to be that guide, to be that wing woman, the one that's helping assist you every step of the way, and doing the legwork and negotiating on your behalf with the lender, speaking directly to the assessor if they have any questions and there's any income information that they need to confirm, and then we get to settlement and happy days. House is yours.
Cara,
That's
Dom
wonderful.
Dom had a question a little while back, if you wanted to ask that, Dom.
Hi, yes, sorry. And I've just noticed that in the chat it says we'll have time for questions at the end. So sorry about that. But I just wanted to ask Cara, while she was on the topic, has she mentioned how some banks might consider if there's child support payments or spousal maintenance payments being given to one of the parties? And I've found in my experience with family law clients, they can be quite private with the documentation that they've signed, spousal maintenance or child support payments. And I was wondering what documents the banks require in order to consider that to be part of the assessment for their loan application, and whether there's, in Cara's experience, pushback from clients providing what are quite sensitive documents or what they would consider to be quite private documents.
Thanks, Dom. And during the process, with learning about your situation, we look at what sort of documents can be provided, and then based on that, we choose a lender with policy that supports that. So some lenders, need the child support agreement. Other lenders, actually, it might just be a stat dec that's signed between the two parties, and as long as the broker notes that I put through with the application, we talk about that. We say that it's an amicable agreement, that some people don't go through the process of getting the child support agreement. They may come to an agreement between themselves. So we can actually, there are lenders that will support that, and they may say, look, we just need to see 3 months worth of bank statements with those credits coming in so that they can use it. So there's definitely options and different lenders that we could look at choosing based on your situation and the documentation that can actually be provided.
Yeah, so if we were advising clients in relation to that, we would say mortgage brokers and banks, lenders, they can be flexible in what kind of documents are required if that satisfies the information that they need, and contact speak with your mortgage broker and the lender about that directly. And if there's alternative ways that the information can be provided, like a bank account statement that's showing the spousal coming in at a certain period every week, and they may not need to provide sensitive documents, just depending on what's required from the lender to satisfy the information they need.
That's right. If you're doing a refinance though, and you're looking at taking your ex coming off the title and also the loan, often a lender though will need whether it's consent orders or binding financial agreement, just to show and just to support, I suppose, the reason for the process, and obviously coming off the title. So they are documents. If it is a refinance, then typically they will need to be supplied, but not in terms of for income verification.
Sure. Thank you.
Thanks, Dom.
Thank you. Does anyone else have any questions? Well, I wanted to just thank the two speakers that we've had, and they've given us the time out of their busy schedules to share their knowledge with us. But Josh, Cara and I are offering our listeners 30 minutes of our time with no charge to discuss individual matters directly with you if you require. Our contact details are on our website, but also will be emailed across to you after the webinar.
See you later.
Thanks, everyone.
Bye, everybody. Thank you.